Hey, welcome everyone to the Story Trading Weekly Meetup. We got a nice agenda for you tonight, but first, Story Trading is not an investment advisor. Investing in securities involves significant risk of loss. This event is being recorded. It'll be provided immediately after the session's over to our paid VIP members, and will be posted up on social media later this week at the close of the week on Friday. So our agenda for tonight, first, I'm going to give you an update on Dario because I had a conversation with a colleague on going over Q1 results. So got a few clarifications on some things. Then we'll do a macro update. Is this a bear market rally that's coming up that we're having right now between the end of the day Friday and futures? Or is the bottom possibly in? We'll talk about that. Then I'll do a quick monkeypox review. And by the way, Vince is going to be joining us with that macro update, and he may have some monkeypox thoughts also. And then we'll get into an open discussion and Q&A. We'll probably pause at the in between, at the end of each section here, and pause the recording so we can have a little open Q&A in between. So we want to move on to the macro discussion. Last week, I showed you this chart, and we talked about the fact that the biggest moves record-wise, right, the largest daily percent, not only the daily percentage gains, but in terms of bottom to trough to peak moves, happen in bear markets. And bear market rallies, like very often they're like 15 to 20% moves from the bottom to the trough. In the .com bust, there were 7 bear market rallies. So far, we've only had 1 bear market rally. So the question is, what comes next? Are we at the beginning of a bear market rally right now? Starting from, the last hour of trading Friday into futures today. Is that a head fake or is that a bear market rally? If it is a bear market rally, is the bottom in? So those are the questions. And I think the answer to that, whether the bottom's in, depends on the fundamentals and the macro outlook. I want to share this chart that I had kind of put together and discovered last week. I've been talking about the 200-week moving average a lot. I've always tended to think of that as a bull market support line. That's how I made a lot of money shorting the COVID crash. So when there was a fundamental issue up here it is, we had that fundamental issue with shutdowns in China. And I'm like, damn, I'm going short the market because we're way above that 200-week moving average. So my target is the 200-week moving average. So that worked out really well for me, made a ton of money. Now, since they're raising interest rates in November, so I've had the same kind of outlook first with ARK, and I also showed you the ARK chart. I'm like, all right, well, this has an excuse to correct now, and it's going to correct at least all the way to the 200-week moving average on the ARK. I have the SPY up here right now. Why didn't I short it as much? It's crazy. Like I should have. And the truth is, personal anecdote of why I probably didn't is because at this point in my trading career and in my portfolio and my assets, I wasn't at like a peak. In fact, I was kind of doing poorly for a bit. And I didn't have a ton of money left. And I just took more risk. I'm like, I feel super, convicted about this. And I'm going for a home run, man. So like, I was basically all cash. I was like 50% short the market in my IRA. I was like an 80% puts in my trading account. And it like changed the trajectory of my portfolio like permanently. So that ended up being the right move. Up here, I already have like a multi-million-dollar portfolio at this point, and I'm like, well, I can't do that. I just couldn't bring myself to do it. Like, think of it, like 50% hedge and like a multi-million IRA. Like, what am I gonna do? Like, short like over $1 million worth of like the Nasdaq? Like, I couldn't do it. So I was just like much more conservative this time, and the same with my trading account. So even though I had the same conviction, but the concept still stands, right? When you're way above the 200-week moving average and you get some sort of macro issue, right? You can correct to that bull market line. And this is the SPY, but I've shown you that QQQ chart a million times. I don't have it up here, but you can pull it up in your own time. And you can see on the Qs, we're just above that 200-week moving average. And I think 280 was the bottom, 200 moving average is like 260. 20 points might seem like it's a lot, but from where it came from, it's really not. And if you look at the history of the tests of the 200-week moving average, at least on the Nasdaq, they weren't all perfect touches like they are in the SPY here. See this touch, see this breach. But on the QQQ, every time besides for the COVID crash, it did go below, but every other test of the 200-week moving average was a little bit above that red line, was a little bit above it, never actually touched it. So it's possible as far as the correction goes, hey, maybe the bottom's in if you look at the QQQs. SPY has a little bit more to fall than QQQs to get close to that 200-week moving average. But, you know, the way I look at this is if you look at historically, when did we break below the 200-week moving average? It only happened twice here on this chart since like 1993, the dot-com bust and the financial crisis. And I just love that signal. And of course, the COVID crash, which like for a week before they decided to pump trillions of dollars into the economy, right? But like from a fundamental perspective, this makes sense. To me, this line is such a strong signal that kind of matches the technicals with the fundamentals. And that concept that this is a long-term bull support line really gives it a lot of credence, right? Because there was a real macro issue there with overvaluations in the dot-com bust, and obviously real macro issue with contagion and the housing bubble crash over here. So we're at that same moment in history, or at least almost, right? Are we going to get an exact touch and test of the 200-week moving average? I don't know. I have a feeling we will. I think what we're experiencing now is a bear market rally, and we will go back to test that line. But historically, whether it goes below it or not, I think entirely depends on if we have a macro issue that is a real macro issue, like are we going to have a sustained deeper recession, or is it just going to be a shallow recession or no recession at all? If it's just a shallow recession or no recession at all, we bounce off this line or slightly above the line. If there is going to be a sustained recession or some macro issue like deglobalization, which is my biggest bear fear, then I think you could break below. And historically, if you break below, I think there's a good chance you're going to have something like this, right? Multiple months or multiple quarters. In this case, in the dot-com, after it broke below the 200-week moving average, it was like, man, almost 2 years after that since it found the bottom. And after the financial crisis was quicker because it was a sharp knife down. So it got to the bottom pretty quick. I would say, I don't know, maybe in 1 quarter, if you look at that, before it started rising. So that's how I look at the macro here. Before we turn it over to Vince, I want to go over a shorter term chart in terms of the trading. By the way, this is what I look at to allocate my IRA, right? Over there, I'm very conservative. If I short, I only do it with single levered PSQ, right? No put options, no SQQQ, very hard to time, very risky. So I have some PSQ in my IRA. But then in my trading account, I look at this, right? I go to the daily, and let me just tell you the story of this chart. Because over here, on this was the day, the May 12th, I guess, was the day the CPI numbers came out. And the day before that, I had decided to remove all my hedge and go basically 100% long in my trading account. Even in my IRA, I removed my hedge. And for one day, it looked like, I don't know, could I be wrong? It was a little choppy. Why did I do that? I did that for 2 reasons. I did that for one reason, first of all, because it was sell the rumor, buy the news kind of scenario, right? Which happens in this kind of market. People anticipating that CPI. And then even though the initial reaction wasn't great, it wasn't like it wasn't this. This was what I was looking for. That happened the next day. So even though we didn't get this sharp move up right when the CPI came out, what happened was the number was 8.3% versus 8.5% the prior month, which was the first time since all this hubbub started that it was down month over month, right? So even though it didn't even though it was a little slightly worse than expectations, from 8.5 to 8.3. So I said, you know what? I think the market's going to interpret that good. So I held on to my hedge and my shorts. I held on to my long position, and then it boomed, and it was great for a couple of days. And then what's this all about? So I thought this was the start of the big bear market rally I was waiting for. And then this happened. What was this? This was Target, followed by Walmart. And that changed my mind too. Like I immediately, in the morning, this morning here, May 18th, I started taking some risk off the table, and I went back into a hedge short position, and I maintained that bearishness all the way down. I felt like a genius here Friday. I'm like, damn, this thing's crashing. I mean, now we actually have recession, I don't want to say recession. We have data of earnings coming down because of margin compression, because the sales are still going up year over year, right? But you have this huge earnings issue with margin compression. It's being company after company reporting, they're showing this margin compression issue with a couple exceptions out there like Home Depot. They didn't have the margin compression, but most are having margin. So I'm like, this is really bad. People are finally going to buy the recession story. And then this, right? So this could end up being a macro issue of maybe even a longer term profit margin compression because of deglobalization. So that's why I got very negative, and I was making a ton of money Friday, and then look what happened in the last hour. Boom, right? So what does that mean? What's that mean? Why did that happen? To me, the way I interpret this, if you go back to the weekly, do I have it here? Oh, I don't have it. I don't have it here. I have it on my phone. But if you look at the RSI on the weekly chart, this is the reason I was expecting a bull market, a bear market rally up here, was because we were way oversold. And the RSI was so low. It was at levels, even below levels where we typically get that we've been getting big, sharp bull moves. So I guess at this point, it's like, yeah, you had this 2-day reaction, maybe for fundamental reasons, but it can't overcome, how oversold the market is. And the RSI is so low that there's just buyers stepping in and starting this squeeze. So that's my interpretation of it. I'm not sure how I'm going to do this. Like as I was like, some of my profits were disappearing really fast on Friday afternoon. I did like sell about half of my puts in my trading account. But the other half of it like vanished to like zero tomorrow morning. So I don't know. But with that, I want to invite Vince on. Vince has been awesome. We want to hear his interpretation of what's going on, macro situation and the charts. How you doing tonight, Vince?
Hi, can you hear me?
Yep, hear you.
You want to give me screen sharing?
Yeah, you got it.
Okay, so essentially, we're dealing with this headline on Friday about monkeypox. I think this is just another distraction. I don't think it's going anywhere, this news story. But one of the things I do want to talk about is what I'm noticing is we on the S&P are pretty oversold. There's a chart I pulled, I don't know who from. Can you see the chart?
Yeah, you see it.
So we've reached a level where you look at this channel in which the bottom of the March 2020 pandemic crash, take the top and draw a channel, and coincidentally, we touched the bottom. It's kind of unusual that we did that, but right there, and it bounced right back up. So does that mean we're going to rally? I firmly believe we're oversold, but this is not the bottom. I believe that this correction is going to be a multi-quarter phenomenon on a RSI basis, and technically, yes, we are oversold. The small caps may actually make a run. And the reason that is I also found this chart. This is the 10-year, which is now forming some type of head and shoulders formation. Okay, so if we dip back, say, below 2.7, 2.6, then there's a good chance that the Nasdaq's going to rally, especially the small caps. So I do believe that we may be in a scenario where we're going to bounce. Here's another chart. I got this from Christian Fromertz. He was at FinTwit. Here's the Nasdaq McClellan Summation Index ratio adjusted over the INDX. And you'll see here, we are reaching very oversold conditions where it looks like we're ready to bounce. Now, I'm not saying that this is going to happen, but to me, it definitely seems as if that there are definitely some funds being liquidated. There's some massive selling. There were certain things that are occurring that is just blatant selling. Selling, let me show you this chart here, that I haven't seen like this in a long time. Let me show you another one. Okay, so You also can see the S&P chart.
Yep.
Okay, so this is the S&P 500 from, oh, actually, so this is the Nasdaq. I mean, we haven't really even had a decent counter trend rally yet. It's been vicious. We've had one. I mean, we've had a couple here, but this was the main drawdown. And we pushed back here a little bit, came back down again. Then we had this obscured one that just out of nowhere. And here we are again. Now we've reached, if I look at the weekly on this, we've reached RSI conditions that I have not seen in a long time. This is the pandemic. This is December 2018. I can't find anything this low. So we are very oversold, and the magnitude and the velocity of this decline is just mind-boggling. If you look at this up and you look at this is a black swan event, and we just corrected to the same degree like we're entering another black swan event. Coincidentally, the weekly is at 10,700. We're only 600 points away. 700.
The weekly what?
The weekly 200 weekly.
Oh, that my target. Yeah, very close.
We're very close.
Yeah.
I mean, we've beat this market like a dead cat so bad that we're going to get a bounce in. I don't know when, but I would not be aggressively shorting here. Everything's so negative. And definitely some funds have been liquidated, the way the selling's been occurring. The other thing which I've noticed is that, well, let's look at the SPX. Same situation in the SPX. Look at the relative strength right here. Black swan event. We're back down again. So really oversold. And this is the 20-day. So I wouldn't be shorting anything right now. If anything, I'm actually exited my FNGD position, a good portion of it on Friday. I personally think that we're due for a bounce. That doesn't mean we're going to bounce, but I would not be shorting here. If you look at most market history has taught me that we're going to get some counter trend rallies. Let me show you another chart. Okay, so this is the Nasdaq 2002. Had its first decline, if you can see this, had its first decline, and then we had a counter trend rally. We have not had a substantial, we had one substantial counter trend rally, okay? And then we declined. Here is Nasdaq 1982, counter trend again. So we at least had some counter, we haven't had any. Here is the S&P 500 in 1974, decline, counter trend, decline, counter trend. But we haven't had any. And again, notice this is a month quarterly event. This is not going to be one and done with us we're not going to bounce anytime soon. I honestly don't see a long-term bounce until sometime next year, but bottom at least meaningful. This is the Dow Jones in 2008. Counter trend, dropped again. But we haven't had a decent counter trend. So that's what I'm seeing on my charts. Let me show you something else. I don't have much because I'm not feeling still 100% yet. But so here's the VIX. But what I'm seeing on the VIX is that it looks like, to me, it's ready for a pullback, which means that the market's probably going to rally. It goes in cycles, up, down, up, down, up, down, up. If we go break 25, 26, a good chance we're going to rally. That doesn't mean, we're going to get a counter rally. This is a fight between the bulls and the bears. So I think that next week, more than likely, we should bounce. I'm not shorting anything. Couple of companies that I've been looking at are really beaten down. This is INTU. Now, Intuit, I have a friend that works there. Intuit's they're like death and taxes. They're always going to be needed. Obviously, we were oversold, but here's a trend line of the results going back to 2018. It's breached the VWAPs and it's at the 200-day weekly. It falls below here. Now, obviously, it's a software company. It's going to get hit, but if this breaches 300, I'm probably going to start adding some. There's some others that I found which are doing well, and it's usually, there's another thing I wanted to talk to you about, and that is the retailers. There's a lot of retailers that are going to be coming up for earnings soon. Can you see this or no? Let me see this. So we have a lot of retailers coming up this week for earnings. If you look at these charts, including Intuit, most of them have been beat up, primarily because of Target and Walmart. They could bounce. Some of these could bounce. The sentiment is so negative that I just don't see another 1,000-point decline. We're going to bounce here soon. We're overdue for one now, and I'm not long yet, but I'm less short, or on the short term, we're less negative on the short term, because I think stock market declines do not just occur in one rapid downward move. It's a fight between the bulls and the bears over a multi-period, and I think that we've just gone down too fast. So we'll probably get a little bit of upswing, but more than likely, it's going to be met with resistance, and it'll probably get hit. There's some other things I researched. Here's the rapid rise in food costs. I know credit card delinquencies are starting to tick up. So there are some things that are the undercurrents which I'm watching, which if these start spiking, and gas prices, the average price of gas in LA County is $6.50 right now per gallon.
Wow. Have you ever seen that before?
No. And I had a friend who was a trader. He went to the Dallas Mavericks Golden State game the other day, and he showed me a picture of some Menlo Park. It was over $7. So this stuff is going to start pinching, but it just doesn't happen, in one. It's a multi-period process, and I think it's going to take its time. Housing, home prices are up, construction activity, the 10th-month lead is dropping. So I'm watching this.
Yeah. Did you take a look at lumber prices by any chance?
No, I've not. Are they down?
I didn't look at it. Well, yeah, no, I guess they're not. They don't trade over the weekend yet. I don't know if the futures started trading at 6 p.m. But as of the end of last week, they were down pretty significantly from the peak, like maybe 40% or so down from the peak.
Yeah,
still way above the pre-COVID levels, but down pretty significantly so far. Yeah, just in the last 6 weeks.
I got quotes to paint my house and redo the concrete, and the quotes I'm getting are ridiculous. I told my wife, okay, well, next year we'll get a 20% less because all these guys will be slow.
For sure.
Here's rising rates, home builder confidence.
Yep.
I follow Bill McBride, and he put this out yesterday. And here we are, year over year percentage change, 4 weeks down 11%. So this is going to start happening. Real estate's a slow moving mechanism. I'm in the business, so I definitely think that, it's going to happen. We're probably going to bounce here a little bit, but the long term, when we start diving again, I'm going to be back into my FNGD, which is, evenly weighted to short all of these.
Wow, I wish I knew about that a few months ago. It's a great ticker.
I've been playing this. I've been playing this as a hedge for a while, since March, and it's worked very well. And if you look at the chart, it's probably ready to pull back a little bit. They had a reverse split, so you got to zoom in a little bit here.
Oh, is this levered? It must
be
levered.
3 times.
That's a little risky though.
It is really risky. So I started buying here somewhere in March. I missed I bought somewhere here, so I did a little bit of a pain. I averaged down, but I knew this was just in the bear market rally. And then this looks like, if you look at a stock chart, it's about to break out, but it really isn't. We're probably going to bear market rally, and this will fall. This falls exponentially, so you have to be careful. But once the market starts declining, this ramps up exponentially. If you bought at the last time the market, you could have picked it up at 34, and today it's more than doubled. So it's you got to be careful how much you buy here, but it can move. It can move. So this, I think, could touch 100 eventually. So anyway, that's all I had today, Ben.
Great. I got one question for you before you stop that screen share. If anyone else has a question, you can get that ready. The VIX, I noticed last week in just terrible price action, Wednesday, Thursday into the first half of Friday, it didn't reach 35. I was a little surprised about that. Just wanted your thoughts on.
Yeah, I was too.
On that.
I was too. There's just no pain here. And you'd think there would be, because I know funds are being liquidated. That I know. I know people are exiting, but I'm just surprised. I don't know if it's been manipulated or not. I have no idea, but I honestly thought with the magnitude of decline we had, we would have been over 40 by now, but it's not.
Yeah. So my question is this a possible risk to the bear market rally thesis at these oversold RSI levels? Meaning, can we sell off more? Because
possible. Possible, but it's been weak. I mean, if you look at this formation since what is this? What's the date on this? This is April. I mean, we'll see. I mean, it's hard to analyze this chart. It's just not going anywhere.
But I think it's a pretty good bet, the bear market rally, but it's not guaranteed. This is what I worry about, because you can't fight the fundamentals if they get really bad. Like if there's a market liquidation because you get contagion from larger hedge funds closing, like we had Melvin Capital happen first. If that kind of cycle starts hitting the news, I don't think RSI matters. I don't think anything matters. It just liquidates.
Correct. Dow's, we're probably going to bounce here, but I still believe we're going to go test 30,000 easily. Weekly's there too. So I still think we have more downside on that. But I'll be looking, and Tesla has broke 700, so that's a problem. That definitely is a problem.
I actually may be interested in picking up some Tesla I'm gonna, whenever the lows are, right? 200, 300, 400, something like that. I don't know. I might be looking at that for the first time.
Yeah, so apparently Beijing, I just saw something come through that Beijing sees record new COVID cases, lockdown concerns, BBG. So
gosh, well, we'll talk about monkeypox in a second. But with that, we're gonna pause the recording to give our VIPs a little more intimate setting to ask some questions before we move on to the monkeypox section. But for those watching the replay on social media, make sure to follow us on YouTube and on Twitter at StoryTrading. We're also on Spotify. You can find our Spotify channel at StoryTrading.com. We have a link to it over there. So thank you everyone for joining us. VIPs, stick around in case you have any questions.